Interest rates in the UK are set to fall. This will mean cheaper fixed rate mortgages for all of us. Hurrah! Okay, so let's talk about what's happening. Well, there's going to be some potential gains for UK homeowners and landlords. And believe it or not, it's because potentially Donald Trump's tariffs may lead to lower mortgage rates and lower interest rates. So tariffs, we've heard it a lot in the news and we've all been worrying about how it's going to affect us. But here's a positive effect. What is the silver lining in the chaos surrounding Donald Trump's latest tariff announcements? Well, a lot of the headlines have been doom and gloom, and there could actually be a surprising upside now for UK homeowners and landlords. Global moves are having a local impact with Trump's announcement of new tariffs. It's caused quite a stir in the financial markets, in many instances pushing down share values. This has also been pushing down swap rates, which are the key numbers that help determine fixed mortgage pricing in the UK. This kind of market instability usually gets a bad reputation, but in this case, it may actually be a good thing for UK borrowers. Why, you might be asking? Because swap rates are reacting to expectations that the interest rates will fall. The Bank of England has already signalled that there may be a cut in interest rates by up to 3 more times in 2025. If that happens, it could bring the Bank of England base rate down to around 4 or even possibly 3.75%, which would likely mean lenders start to lower mortgage interest rates. However, I would urge caution here because it may not happen fast. Because swap rates are dropping right now, we're already seeing signs of a change. As of this morning, 5-year swap rates were at 3.63%, down from 3.97% just a week ago. That's quite a lot of difference. 2-year swap rates are at 3.66%, down from 4.02%. That is a pretty decent shift in a very short space of time. And it tells us that lenders are starting to prepare for falling base rates. So what could this really mean for you? So if you've got a mortgage on your own home that's coming up to the end of a fixed rate period and coming up for renewal, this has been something that we've all been particularly scared of due to the interest rates rising in the last couple of years. Now, this also applies on buy-to-let property for those landlords who own properties that might be coming up to the end of 2-year or even probably more likely 5-year fixed rate periods. And really, before, those interest rates were much lower than they have been right now. So right now, if we're looking at today, the best 2-year fixed mortgage rates are sitting at about 4.05%. This is on home borrowing, with a fee of about £999. But you need a deposit of typically 40% or more to access those deals. So we call this loan to value. Loan to value, where we have 60% loan to value or less, means that we might get access to better interest rates. So the lower your loan to value, the better your interest rates are likely to be. Now, around 60%, as I said, is where you're going to start to see a little bit more attractiveness in your mortgage rates. And now listen, if you're mortgaging your own home and you're just about to do it, I can't give you the advice here because I'm not a financial advisor, but I can say that things may change in the coming months. So it depends how close you are to that. What about buy-to-let borrowers? Now, I have a buy-to-let portfolio, and for buy-to-let landlords, I know some of my mortgages, my 5-year fixed rates, are coming up for renewal in the next 2 years. So this could offer a real financial breather for very hard push landlords at the moment who are getting hit from all sides in terms of costs. So increasing bills, lowering the EPCs, all of these things are hitting you. So this could be a financial breather. After years of tighter regulations, increased taxes, rising interest costs, and even a slight drop in mortgage rates could significantly boost rental yields and ease monthly cash flow. So if you've got multiple properties or portfolio loans coming up for renewal, the potential to refinance at lower rates could improve your margins, or at the very least, help you to stay profitable in a more challenging rental market. And with lenders potentially becoming more competitive again, we may see more buy-to-let specific products being rolled out, and let's hope they've got better terms for all of us. Also worth noting, if you're planning to expand your portfolio, lower interest rates could reduce borrowing costs and make purchases more viable, especially if the property prices remain quite steady. So what should you do? What should we all do? If you're approaching the end of a fixed rate deal, or you're just keeping an eye on the market, now's the good time to start talking to your financial advisors and looking at options. Don't expect the banks to act overnight, but if the trend holds, we could start seeing lenders trimming rates over the next few weeks or months. A final thought. It's a bit ironic, but Trump's tariffs might actually bring some financial relief for UK mortgage holders and landlords. So even in unpredictable global markets, there may be opportunities if you're paying attention. Keep your eye on those swap rates. Google it, have a look, and see if you're remortgaging soon. This could be your moment to lock in a better deal. Please like and subscribe to get more property market updates here. And also, we are sharing information about the market. We cannot give financial advice. Thank you.